You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Wednesday, September 26, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Wednesday. First thing to know is Fed is expected to increase interest rates. The Federal Reserve is expected to increase interest rates when it concludes its 2-day policy meeting in Washington later Wednesday. The U.S. Central Bank is widely expected to raise interest rates by 1/4 percentage point to 2.25% in what would be its 3rd rate hike of the year. With a rate hike all but locked in, the Fed statement released at 2 p.m. Eastern Time will be the main focus of the day. Fed Chairman Jeremy Powell will give his press conference at 2:30 p.m. Eastern. The so-called dot plot graph, which shows expectations by Fed members of future rate hikes, could also be market moving as investors look for clues of an increase in December. The chance of a 4th rate hike in December is priced in at 77.7%. That's down from the previous week's chance of 84.2%. Second thing to know today is stocks rebound as all eyes turn to a Fed decision. The Fed decision. The U.S. futures pointed to a higher open on Wall Street as investors wait for the Fed decision. The third thing to note today is the dollar is steady as investors await the Fed. The U.S. dollar was holding steady against the currency basket as investors awaited the conclusion of the Fed meeting, with the U.S. dollar index little changed at 93.75 by 5:26 a.m. Eastern in range-bound trade. The fourth thing to note today is Brent retreats from near 4-year highs, and U.S. inventory data is ahead. Brent prices retreated from the 4-year highs hit in the previous session. London traded Brent crude futures were down 0.33% to $80.99 a barrel after hitting $82.55 on Tuesday, the highest price since November of 2014. U.S. crude prices were down 0.3% to $72.06, pulling back from Tuesday's highs of $72.75. That's the most since July 11. The impending loss of supply from Iran has seen oil prices rally, with the Organization of Petroleum Exporting Countries and non-OPEC members, including Russia, seemingly reluctant to boost output in order to offset falling global supply. And the fifth thing to know today is new home sales data is released. Housing numbers will be closely watched as investors wait for the interest rate decision from the Fed and look for signs of continued economic strength. New home sales data comes out at 9 a.m. Eastern, already out. with analysts expected a rise of 630,000 in August. That's compared to 627,000 in July. On Tuesday, the home price index for July came in as expected at 0.2%. Our second story today is from CNBC.com. Weekly mortgage applications rise 2.9% as interest rates move even higher. Homeowners continued their rush to refinance as mortgage rates jumped even higher last week. The new highs seem to be sending a message that this is the last chance for most borrowers to benefit from a refinance. Total mortgage application volume rose 2.9% last week, compared with the previous week, according to the Mortgage Bankers Association's seasonally adjusted index. Volume was 15.5% lower than the same week 1 year ago, when interest rates were nearly a full percentage point lower. Applications to refinance a home loan increased 3% from the previous week, but were still 34.5% lower than the same week a year ago. Interest rates have been so low for so long that most homeowners who are eligible have already refinanced to near record low rates. For those looking to pull cash out of their homes, given the recent increase in home values and equity, higher rates mean it's better to take out a second loan rather than lose a low rate on the first mortgage. Our third story today is from investing.com. Chop chop. China shuns U.S. soybeans amid the trade war and turns to Brazil. China's soybean processors are snapping up record volumes of Brazilian cargoes for shipment in the fourth quarter, curbing purchases of U.S. crops in North America's peak marketing season as the trade war between Washington and Beijing intensifies. That shift away from U.S. soybeans by China, which takes more than 60% of the commodity traded worldwide, will pile further pressure on the benchmark Chicago Board of Trade prices after they plummeted 10-year lows last week. China in July imposed a retaliatory 25% import duty on U.S. soybeans as part of a tit-for-tat trade dispute between the world's top two economies. Conflict that gathered steam this week with the introduction of fresh tariffs on other products. And our final story today is from investing.com. Hyatt Hotels to more than double its Africa hotels by 2020. Hyatt Hotels Corp plans to more than double its hotels in Africa by 2020 to capitalize on improved travel links and robust economic growth that is boosting demand for rooms, the company's regional vice president said on Wednesday. Hyatt currently has 9 hotels in Africa, but lags far behind rivals such as Accor Hotels, which has more than 100 hotels in Africa, and has earmarked $1 billion to invest in expansion on the continent. Another rival, Radisson, has 86 hotels and almost 18,000 rooms in operation and under development after rapid Africa expansion. A senior Radisson executive for Africa told Reuters last year it planned to have 120 hotels by 2021. And that, ladies and gentlemen, is news you can use for today, September 26th, 2018, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a nice day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.